Hello everyone. Today we're going to have a brief midday update, then I'll give you my view on today's FOMC meeting. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my North American market comment. Well, at midday in Europe, the dollar is down against all its major counterparts and most emerging market currencies to boot. This is clearly a reaction to the shift in the recent polls concerning the U.S. election, as I discussed in this morning's video. You can tell that because the safe haven yen is one of the biggest gainers, while almost the only currency the dollar is rising against is the Mexican peso. The dollar is even down against the Norwegian krone despite the further fall in oil prices. Stock prices, too, are down across the board in Asia and in Europe. Meanwhile, gold and silver are rallying. So it's a typical risk-off movement. Moving right along, yesterday it was the Bank of Japan and the Reserve Bank of Australia. Today it's the U.S. Fed. The U.S. Federal Open Market Committee, the FOMC, meets today to set rates. On the one hand, the case for raising rates has improved since their last meeting in September. Non-farm payrolls have picked up, GDP growth accelerated, and the core PCE, personal consumption expenditure deflator inflation gauge, has risen a bit to 1.7%, which is very close to the Fed's 2% target, as Vice Chair Fisher pointed out recently. On the other hand, the reasons why they held back in September, the rise in the labor participation rate with no acceleration in wage inflation, remain intact as well. Either way, the fact is, though, that they're unlikely to raise rates so close to a hotly contested presidential election, which is less than a week away. So the market puts only a 16% probability of a hike today versus a 68% chance of a hike in December. Therefore, the task of this meeting will probably be to prepare the market for what they're likely to do in December. Well, of course, they still have to leave themselves some room to hold back if, by some chance, the next two payroll figures disappoint. They're likely to do this by making some subtle changes in the wording of the text to make it clear that they're getting ready to hike without actually saying that they will hike. In any event, a substantial majority of the committee has already indicated by their interest rate projections on the famous dot plot that they expect to raise rates at least one more time this year. And several have said so outright in recent speeches, so really not much more guidance is needed. I'd expect to see some further indication that they're getting ready to hike in the text, and I would expect to see that firm up the dollar somewhat, but not hugely, as it's already well discounted in the market. That's the market assumption. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.